Peter Maguire is Managing Director of Commodity Warrants Australia and joins us now live in the studio. Good morning, Peter.
Good morning, Karen.
There's a theme kicking around where, of course, we've got markets closed in the US with the Memorial Day holiday.
Yes.
What's the direction for commodities that you're seeing now in the next 24 hours?
Okay, electronic trade will be open as far as precious metals and energies. The rest of it is closed because of the holiday. And we think that you wouldn't be surprised. The US dollar hit through 80 cents, 80 against the basket of 6. It hit a low of 79.9. So we think there's going to be continued pressure on gold, upside. If it takes 967 out, Karen, I think the best part of 1,000, 1,010 is very achievable very quickly. And the US dollar has had a massive fall in the last, well, since really the equity rebound on the 6th of March. Equities went up, US dollar went down. Simple as that.
Can you see risk to gold, though? Because some people are saying at these levels it does look a little bit stretched. So there are some very, very wide views on the direction for gold.
Sure, but I'm more worried about the US dollar. It's through 80 against the basket. I think probably 78's got to be the next target. It just seems to be falling. It's really falling, Karen, around about 1% a week. So that's quite substantial. And we've been watching gold really since around about 9.15 with our clients. And now I think 967 is the big one. If it takes that out this week, I think there's more upside.
Peter, just turning to oil, we've got that OPEC meeting later on this week on Thursday. They're most likely to keep production where it is steady. Unlikely to cut it because that's really going to send the wrong signal to consumers, possibly derailing the global economic recovery.
I agree with you, Sri. I don't think they can take an aggressive stance. They could be aggressive when it was $33, $34 and $40 a barrel, but now over 60. You're looking at December as around about 64, Sri. So I think it's in that target zone. They're mindful also where the US dollar's trading, and they're also mindful that with the big three owners of US dollars being Russia, China and Japan, their major concern at the moment is to try and get that US dollar to consolidate. But at the moment, it seems to be in free fall, Sri.
But broadly speaking, Peter, when you look at this run-up in commodities, oil and the base metals especially, aren't some of these markets possibly running a little bit ahead of themselves, especially given the fact that we still got some pretty sizable inventory overhangs, especially in aluminium, if you take a look at the base metals? Yeah,
sure. I mean, I agree with you. Stockpiles are certainly rising, but the big issue is we're seeing the Baltic Dry Freight Index now at highs. I think it's around about 27 or 2,800, so it's had an enormous rally in the last couple of months. And as you mentioned, the price of base metals, but when you think about it, sure, they're up 20% and 30% base metals, but they were off 80%. So they're only retracing only very minor gains compared to where they were a year and a half ago. So I think there's still plenty of upside there for the base metals in the longer term, Sri. But certainly they could be a little bit overbought at the moment.
Peter, I want to quiz you about some of the house views that you have on your sheet here about some of the soft commodities, because I was reading a report on the weekend suggesting that we could be re-entering that era of a world food crisis where we're starting to see prices, food inflation creep in quite substantially, and if there are drought conditions or weather conditions that adversely impact some of these softs, then we could see a rapid step up in prices. So how does that fit with some of the recommendations you have?
Yeah, I tend to agree, Karen. I think over the longer term, and certainly when you deal with Mother Nature and floods and droughts and so on, then that can quickly affect prices. We think that if you look at the softs as far as wheat, soy and corn, at the moment we're not standout bulls on it. We just think that it's more bullish than bearish, and probably some more upside expected. And when you take that across to the other markets, being cotton and sugar and coffee and cocoa and all of those markets, yes, there's more upside in that particular sector as well. And that all is very dependent also, not only Mother Nature, but also seasonality and the US dollar, because they're all traded in that particular currency. So as that continues to fall, the US dollar, that will probably also underpin the price of the softs.
Okay, thanks for your thoughts on that.
Karen.